In a recent interview, Robert Kiyosaki predicted a dangerous market crash will happen very soon, and he revealed the one asset that he is currently buying. Kiyosaki made some shocking and very concerning statements everyone should be aware of, including an upcoming market crash which will shift the US economy. He also explains how investors should prepare so that your money will be protected, while also being able to make money with the market crash. Later in this video, I'll be revealing what I'm currently doing with my stocks, and most importantly, find out what stocks I plan on buying to protect my stock portfolio from a potential market collapse. Make sure you listen closely to the following clip of him talking. I will be breaking up the clips and will do my best explaining each segment. Have a listen to what Robert Kiyosaki had to say.
I have bad news for you. It's here. We're going down big time this year. I'm predicting the biggest crash. Glad you listened so you don't have to be a victim of all this wokeism and stupidity out there in the marketplace. Trouble with the real estate market, the stock market, bond market, real estate market. When it goes down, it's like a sinkhole. It takes businesses, neighborhoods, it takes everything with them because it affects so many more people. Whereas stock, you could lose Apple and you're not in Apple, it doesn't affect you. But when you lose business or real estate and all this, it takes everything down with them. So that's why right now there's migrations out of certain states and into certain states. And the reason I like oil is can't print oil. You can print stocks, you can print ETFs, you can print money, can't print oil, yet at least. And what I say is that civilization runs on energy. And if we don't have enough energy, or the price of energy goes up, standard of living comes down.
You just watched Robert Kiyosaki claiming that a massive crash in the economy is coming in the near future. Kiyosaki also mentions it is important to listen and pay attention to what is happening in the world to prevent yourself from becoming what he claims to be wokeism and ignorance or lack of knowledge in the market. Kiyosaki also compares the real estate market to a sinkhole, claiming that it often destroys businesses and neighborhoods, affecting many people. Unlike a stock, he used Apple stock as an example, claiming that if the price of Apple stock falls, only stockholders and people involved in it will be affected. But if real estate or businesses fails, it impacts way more people. Kiyosaki later claims that he likes oil because it could not be printed and inflated. You see, stocks and money could be printed, but you can't print out oil. Oil is crucial and important for civilizations to function, and an increase in oil price will have a huge impact on people around the world. Kiyosaki also states that the termination of the pipeline in Keystone affected the oil market and what it meant for his own. He claims that when energy cost is on the rise, it causes excessive inflation. Political suffering draws people such as Hitler, Stalin, and Lenin. Kiyosaki warns against relying only on hope for retirement, stating the need for aggressive and educated financial actions. He also reminds people of the buy and hold approach that people have always accepted in their lives. Kiyosaki warns that everything is probably not going to get better and expect more issues within the corporate financial markets and pensions.
And that's why what happened when our buddy Biden took the Keystone XL pipeline offline. It made me richer because the oil that Mike and I were selling from our oil wells in North Dakota and Louisiana and Texas, we were selling at $30 a barrel. When Biden got elected, oil went to a spike to 130. Every time there's hyperinflation, dictators arise, revolutions come up. That was Stalin, Mao, Lenin, and Hitler. And we're cruising for that right now. Hyperinflation pisses people off. Can't put food on the table, they can't afford to live, lifestyle crashes, living crashes. But the bad thing is because this energy that's driving a lot of it plus too much money makes everything expensive. This market's going to come down big time, big time.
Most people sadly have a buy and hope strategy. They buy their investments, their mutual funds and their 401k, and they just hope everything's going to work out. As I've said before in the show, hope is not a retirement strategy. And that's what most people do. They have their head in the sand, and so far they've woken up today and they've seen their 401k down by 25, 30%, wondering what happened. And this is not over. If people think that that's going to get better, it's not. Things are going to get a lot worse, as Robert says.
In this section of the interview, Mike Maselli and Robert Kiyosaki talk about several ways to invest with a focus on the oil and gas sectors. They also mention the tax benefits of investing in these sectors. Kiyosaki shows that natural gas and oil investments provide special tax benefits, especially when it comes to tax write-offs for intangible drilling costs, or IDCs, which can lower a person's taxable income drastically. He later explains that the government uses all of these write-offs as a way of promoting investments in these essential sectors. They go into further details on the concept of tax deductions as a reward for multiple investment types, mentioning how starting a business or making an energy investment may have a huge tax benefit. Kiyosaki shows the importance it is to understanding and taking advantage of the tax benefit in order to increase profits while reducing risk. Maselli talks about his experience in making oil and gas wells, emphasizing the steady cash flow that these investments produce and compares it to typical retirement savings accounts, such as 401k plans, which at times depend on the market performance and may fail to generate consistent cash flow. Maselli's good encounter with oil and gas investment shows the potential benefits for people looking for other sources of income.
And the biggest bubble of all, most people don't know this, is corporate credit. And what was happening during the boom, they kept dropping interest rates, zero interest rates. Many companies couldn't grow their companies. So they would borrow the balance sheet of their company and they'd buy back their stock. And they would stock the company full of this debt to buy back their stock. Like Apple just uses their credit to buy more Apple stock. That's what it means. The stock markets are crashing. The same with bond markets. The reason London or England just went down is they couldn't make the pensions, the defined benefit pensions for the people. So what they did is they borrowed money at 0% to buy bonds at 3%, hoping that would pay for the retirees. And there's, like in America, 10,000 a day retiring today. And all of a sudden, when they did that thing where they reversed and the interest rates dropped, bond markets dropped. I won't touch anything you can print. Toilet paper is printable. That's how I look at it.
Well, it's as John said, a lot of people with 401ks, they're a buy and hold strategy. I think most people that are accredited and have made a lot of money in their career, one, they want to put that money to work where they can generate cash flow, and two, they want to not pay taxes. But anyway, as far as oil and gas, you have what's called intangible drilling cost deductions, or IDC. And IDCs is pretty much, you can write off right at about 75% of that in a well. So an investor that's coming in who is in a top tax bracket, he's able to actually create a savings because the federal government is coming in and they're writing that off because they want people to find, regardless of what you read in the paper today, we still need oil and gas reserves, so those tax advantages are still there. So in essence, if you're in a 35% tax bracket and say you invest $100,000, that's about a $27,000 savings that you're able to gain, right when you invest. So that reduces the amount of risk you have or money you have at risk.
Right, that's what Tom Wheelwright writes about in his tax book. He talks about tax breaks are incentives. So if you start a business, they give you an incentive for that. You drill for oil, provide housing, they're in tax incentives. But if you're an employee or a self-employed small business owner, you get taxed the highest. So let's say on top of that, when we strike oil, I get a depletion allowance too. What does that mean?
Well, the depletion allowance is on every dollar that is income from oil, the federal government allows you to take a 15% depletion allowance. So you're able to take that off of your income that you're generating from oil and gas. But the main plus is that you're looking for cash flow, right? You're looking to strike oil. You're looking for that oil.
We're not to buy, hold, and pray.
No.
That's right. I'm not. I want my money back and pay no taxes.
Right. Basically, you're drilling wells. The areas that we participate in are primarily the Bakken up in North Dakota, which it's it's an unconventional play, like we talked about a little bit earlier, the horizontal play. But there's been over 14,000 wells drilled there now.
And what's happened is some of the things I've invested in, they're still paying me, right?
Right. You're getting a check every month.
Yeah. And that's why, John, you don't find me with a 401k, celebrating, because the cash flowing the other way is flowing to Wall Street. And when I invest with Mike Maselli, it's flowing towards me, and the government gives me tax breaks. The point here is this: the reason we have the cash flow board game is for you to get out of that rat race and qualify to invest as an accredited investor on the fast track. But of course, most people can't do that because they don't have any financial education, but they don't have enough money anyway.
100%. The average 401k is $70,000. And that's what people are expecting to retire on at age 65. It's absolutely scary.
I'm predicting the biggest crash, just like Mother England went down, because they're playing games with money and interest rates and all that other garbage. But what do you think of, let's say, a 68-year-old, 70-year-old guy whose 401k is
I'll
toast.
tell you exactly what they're saying. I just had a conversation with a couple of advisors the other day. They're saying stay in. It's buy, hold. It's not, and then they'll say it's not timey. We don't want to time the market. It's time in the market. Don't worry, everything will resolve itself. Everything will come back as usual, as it always has in the past. Those are the standard bylines that you're hearing from the financial industry. Just stay the course.
So if a person, I'm not against paper assets, it's just being an entrepreneur. I don't have to invest in them. I don't trust paper at all. Toilet paper's on it, I don't trust it. Paper has many advantages that I don't have. I mean, a hard asset guy doesn't.
I think the big one we could just focus on is liquidity. I mean, I could get out like that with a click of my smartphone, whereas hard assets, you don't have that flexibility. So that's the key advantage that I like.
So when I invest with Mike, I'm in for the long term, and that's why I've got to be careful what he invests in, what he does with the money. So final words, I only invest in what cannot be printed. Is that, but I'm not invited on most of the stock shows because all they want to do is sell you more stock. So what would you advise somebody who wants to switch out of paper into what you're doing? Any advice?
Well, just on the oil issue itself, I mean, I think, a lot of people don't really understand what oil is used for. Oil is in just about everything we touch.
Plastic, paper bag,
paper bags, in food. And of course, we're going to see real food
fertilizer.
shortages, right? Fertilizer, we're going to see real food shortages here this year coming up. I think Europe is in a really bad place. A lot of our clients, they're in paper. They take a portion of their income and they put it into oil and gas or gold or silver or something, just to have that diversification. Just the normal investor, a lot of them, they obviously want that diversification and the energy, because I just think everybody sees that, they can see through this stuff that this administration is trying to push. They go to the gas pump every day. Diesel is still selling for close to $5 a gallon. As far as that, gasoline is still, even though they can continue to say, that it's just going down. They're depleting our national reserves.
What is that?
Well,
why are they depleting our reserves? They could just drill more.
One thing, they want to do away with hydrocarbons. Secondly is you've got a midterm election coming up that obviously they don't want to see high oil prices. I can promise you after the election is over with, they're going to stop taking oil out of the national reserve. Just the defense reserve. And then they're going to, we're going to see high prices again. But that's the reason why. How many barrels of oil how many millions of barrels? I think they're releasing 1 million barrels a day just to keep the price down.
So they get reelected?
So they get reelected, and then they can go forward and push this Green New Deal.
Kiyosaki clarifies his prediction, predicting that there will be a big crash, blaming financial regulators for it, plus an interest rate manipulation, which he fears about the potential effects of such risk in the market, and urges the public to take action in their financial strategies. In addition, Kiyosaki talks about the advice he will provide to someone in their 60s or 70s who got some serious losses in their 401ks, providing views into different strategies supported by financial advisors in traditional investing sectors. Kiyosaki suggests what is often accepted by financial advisors, which is to stay on track and not to attempt to predict the market. He also expresses skepticism about paper assets and points out his love for investments that are hard to manipulate, like commodities and real estate. Maselli adds to the discussion by demonstrating liquidity benefits of paper assets. He recognizes the fact that paper assets could be carried out rapidly with just one click. However, selling hard assets may not offer the same degree of flexibility. Kiyosaki demonstrates his commitment to long-term investments and stresses the significance of making careful choices about how to manage one's money. He emphasizes his passion for investments that are impossible to fabricate, highlighting his lack of confidence in paper assets. They additionally talk about the importance of oil as an essential component in many everyday goods and the potential consequences of reducing national reserves. They also talked about the potential for investments in the energy sector, especially in light of recent shifts in the political and economic landscape. And as promised, here's what I'm doing with my stock portfolio. As a long-term investor, I plan on hanging on to all of my stocks, and there is one stock that I plan on adding into my stock portfolio. I believe that every investor should consider investing into a gas stock, an energy company. Robert Kiyosaki encourages people to invest into assets that are impossible to print out. He used the example of oil and gas, and after After doing my research, I'll be buying the gas stock name ExxonMobil, ticker symbol XOM. Based on my research, ExxonMobil has a promising future when it comes to energy. This stock will help me diversify my portfolio and help me protect me from any future market crashes. If we take a look at the stock price, we can see that this energy stock is currently selling at $103.90 per share at the time of this recording. We could also see that ExxonMobil is down 0.058% for the day. When checking out the 5-year chart, we can see that this stock is up 30.69% in the past 5 years. And if we scroll down, we could see that this stock has a 52-week high of $120.70 and a 52-week low of $98.02. ExxonMobil pays out a pretty good dividend. In fact, this stock has an annual dividend yield of 3.66%, which will be quarterly dividend payout amount of 95 cents per share. If you're looking for other great stocks to invest in, then you guys should check out what 2 stocks the billionaire named Charlie Munger is investing in. See you there, and don't forget to like and subscribe for more.